Hi, this is Zam here with US Blue Chips here at Zach's Traders Cafe for Sunday, the 1st of June. Starting off with Apple, which even though the market as a whole has recovered, this has not been able to shake off the tariff slump, and we're within a falling trend channel in place since the turn of the year. Top of the channel there, basically level with the 50-day moving average at 205. Above that, we have potential breakout to fill the gap up towards 220. Which was the late or early April gap top. And below that, there's the risk of another test of support in the $193 area. And obviously, the longer we stay below that falling 50-day line, the greater the chance of a deeper dive towards $170. In the meantime, any rallies towards that 50-day line and the top of that channel towards 205 could be regarded as shorting opportunities. Moving on to Amazon, and here it's a case of another stock with a falling trend channel, this one rather wider. You could say that we're sort of half full or half empty, it's up to you. But at least while we're below that, the upper parallel of that falling trend channel around $210, there is the risk of another test of recent support just below $200. Worst case, probably the 50-day line at 191. On the upside, if we do break through the $210 area, there's a chance of hitting that red resistance line projection from March as high as 220 over the course of the rest of this month. Next on the list is Google, or as it rather irritatingly prefers to be known, Alphabet. Here you can see that we've got a rising trend channel, the floor of that channel there, around $166. Above that, still regarding this as a potential recovery situation, as sort of an inverted head and shoulders, but the main neckline resistance there around 177, and we really need a weekly close above that to give us the next level up, which is towards 187. That was resistance back in February. That looks like quite a tough resistance area as it was previously in December, January, old support. But at least while we're above the floor of that channel, still nominally in a rising trend channel, which could later this year lead to the top of the range and new highs through $210. At the moment, if the rug is pulled, then the worst we're thinking of is the 50-day line at $161. Moving along to one of the stocks at the moment, with the Bitcoin Treasury being the new rock and roll, or the current rock and roll for the stock market. Here you can see that MicroStrategy still finding support above the old resistance area around towards $350. That's also where the 50-day line is at the moment. So while we're above that, I suppose the share is regarded as a buy on dips, even though the RSI now at 46 has fallen below neutral 50. So we are concerned that there may need to be a test of that 50-day line before this stock can head higher through what has been quite strong $428 resistance. You can see resistance not only in the last few weeks, but also after that brief spike we had back in November. But at the moment, just hoping really that any dips towards that 50-day line are an accumulation zone. Moving on to a stock which doesn't have any trouble like that at all, which is Netflix, heading for the stars. And here we've got a rising trend channel in place since November. The top of the channel there heading for $13.50. And we're certainly looking at that while we're above recent support around the $1,180 mark. Any dips towards that zone currently regarded as a buy opportunity on a technical basis, obviously. And here you can see that the volatility has gone down. So hopefully we do actually have a strong base there for a fresh leg to the upside. Moving along to Nvidia, which, a bit like Apple, can't shake off the near-term falling trend channel. You could argue exactly where that is. I've drawn it there at around the $138 level. But basically, that any rally towards $140 is currently a shorting opportunity, with a potential test of the sub 130 area on tap. Worst case probably is to fill the second gap up there from last month and head back down to the $120 zone. But in the meantime, we're looking at a situation which still is rather heavy in terms of the resistance we have there. Moving on to Palantir, and here you can see that we've got some double choice of scenarios here. We've got the rising trend channel there, the top of the channel, the red one, from November as high as $138. And what could be happening at the moment, which looks as though it is happening, is that we're heading towards a steeper channel up to $180, maybe by the end of next month, by the end of July, while we're above recent support around $180. If you're cautious, I suppose you'd wait for a break of that $137 mark before assuming a move towards 180 was on its way. Moving along to the situation at Salesforce, and here, not quite as exciting as the other markets, but you can't have everything here. We've got a potential rising trend channel base. The floor of the channel there around $257. Above that, looking for the top of the recent range, post-March range, as high as $290 plus. Top of that channel heading for 305, but let's just go for the upper 290s, or the 290s if we can. If you're cautious, you'd probably wait for an end-of-day close back above that 50-day line, given that we've gapped down below it, or just look to buy dips towards the floor of that channel, $257. Moving on to Tesla, where Elon Musk has left the building, in this case the White House. Situation here is that we've had a double top there with that 365 resistance zone, and probably have to seek the recent support there towards 330, even if we go higher after that. The other point to note is that there is an extended rising trend channel there, floor of the channel there, from the beginning of last year, heading towards $315. At least while we're above that, still in the channel, still in an uptrend. Below that, there's a risk of a test of the 50-day moving average at $286. But ideally, the shares remain within that channel, even though we have that March to May breakdown below the floor of the channel. Finishing off with Uber, and here you can see that old resistance there back in February around the $83 mark has become new support, at least for now. We do break down below that, then we've got the 50-day line at $79, but otherwise above 83, still looking for, or we are looking for, a retest of the highs of last month through $92. That's it for me this week. We'll have the same at the same time next week.